I guess, like you said, pretty much anticipated. No one actually expected any movement in the rates this soon. Uh, uh, Basically, the central bank team it has always been more of watching the effect of the previous implicit decision in terms of unlocking credit into the economy, which was clearly stated as a fallout of the meeting that they are very much interested in seeing the unlocking of credit into the economy, and also, but on the other side, they actually noted that two factors there, actually the demand side and the supply side, actually will drive this thing happening. So on their own supply side, they will do their bit of keeping the rates at a low level, ensuring that liquidity continues in the market, and the other demand side, or the factors that would actually drive the demand, is what the pushed for in talking about the support of the real sector by infrastructure growth and other various factors that would actually help the cost of production actually be reduced for the manufacturers.
If we take a look at it, though, in this macroeconomic picture, we do have inflationary risks that persist, given the fact that we have an expansionary budget on the one hand to contend with, on the other, the soaking up of bad bank loans as well. Now, let's take a look at that, because in that context, many have said that the exchange rate may provide a more effective tool than interest rates in keeping price pressures contained. Do you share that sentiment? Should we be looking at the exchange rate as a tool, a management tool, as opposed to interest rates right now?
Basically, it actually depends on how much, on how these pressures come into the market. You could actually use, I mean, I would say that a lot of tools are available. Currently, right now, the CBN might not really want to use the interest rate, because what it would do, it would actually hurt credits flow into the market, and I'm sure that that's not the very best of options that they have right now to do. The governor has already said that keeping the interest rate at the low levels is a priority for him, and I think he will continue in that direction. On the use of the exchange rate, that factor might come in, I mean, but outside of that, we would rather say we'll rather watch the data, watch how things come out, we'll watch how the market, how generally the economy responds to this pressure as it comes, and now be able to say, okay, yes, we know that in this direction, we know because of what is happening, these are the most probable tools that we would see the governor, the central bank using to be able to contain price movement. But you might not also.
Sorry to interrupt, but having said all of that, what's your outlook for the Naira then? What kind of trading range have you pegged out for the short term? Because really the question is whether the Central Bank of Nigeria might have the appetite to allow the Naira to appreciate in order to stall any potential for price pressures to build.
Yes, I think the central bank definitely will allow the market, the Naira, move in tandem with the market, albeit in a controlled manner, but definitely we would think that the price of the Naira will be driven basically by the market. Take on the short term actually would be like you'll see the Naira actually making a swing between the upper and the lower band, in terms of the fact that till the market get a full grasp of how things turn out to be. But on the general thing, we will see the Naira actually making some gains over the period, as the various economic reform packages actually filter into the economy.